CNBC TV 18, embarking on a quarter century of excellence.
Wall Street rallies for the sixth straight week in a row. The S&P 500 closes at its highest level in 2023 after the November jobs report and consumer survey data signal a resilient economy and cooling inflation. Stocks in the Asia-Pacific trade mixed as inflation in China falls at the fastest pace since November 2020. The GIFT Nifty is implying a flat start for the Indian market. Crude prices rebound on Friday but closed lower for the seventh straight week as record production and demand concerns weigh. Gold slips below $2,000 an ounce on Friday, seeing its worst week in the last 10. The government says that the curbs on use of sugarcane juice for ethanol production is a temporary pause. Add that they will review the present position if there is an uptick in sugarcane production. Tribal leader Vishnu Devsai is named as the Chief Minister of Chhattisgarh. Reports suggest the state will also get two Deputy Chief Ministers in Vijay Sharma and Arun Sao, while three-time Chief Minister Raman Singh will be named Speaker of the Chhattisgarh Assembly. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a fresh Monday morning. We have a lot of cues to talk about. But first up, as always, let's take a look at what the Asian markets are doing right now. They're largely mixed, but has to be on the higher side right now. The Hang Seng, though, is the one which is seeing a bigger cut, 1% lower there. We have the Shanghai, which is lower, 1% lower, despite the inflation slowing at the fastest level in China in the recent data. However, if we look at Nikkei, that one is up around 1.7%. The Kospi is also higher. Taiwanese index, though, absolutely flat with some positive bias. So it's a mixed picture right now for the Asian markets. But if we look at the GIFT Nifty, that is the one which will indicate how our markets will move. And that one is indicating a flatter start right now for our own markets. Absolutely flat with some positive bias. A 3-point uptick is what the GIFT Nifty is implying as we speak. And we have seen a stellar rally in last trading session. But let's talk about the US market. Wall Street ended higher on Friday. Dow Jones gained 130 points, while S&P 500 and the tech-heavy Nasdaq gained close to 0.5%. S&P 500 also notched its highest level of 2023 after the November jobs report signaled a resilient economy and cooling inflation. All the major averages finished the week with gains. Dow Jones and S&P rose over 0.2%, and both indices wrapped 6 winning weeks, their longest run since 2019. The Nasdaq also advanced 0.7%. And November's non-farm payrolls report showed an unexpected drop in the unemployment rate, falling to 3.7% versus 3.9%. CNBC's Rick Santelli gets us the key highlights from the November jobs report data.
Here's their November read on the big jobs report. 199,000, a bit better than expectations. But as Steve referenced, the smart people, they were a little bit too high, it seems. 150,000 would be private payrolls, fairly close in line with expectations. A drop in the unemployment rate from 3.9 to 3.7. 3.7. The last time we were at 3.7 exactly was May, but in July we were at 3.5. In August we were at 3.8. So you can see that this is coming down a little bit, and that is a good thing. The high water mark has been 3.9. Our last look, which was the highest since January of 2022, and it was at 4%. Average hourly earnings, I don't see them populating yet on a month-over-month or year-over-year, and I do apologize. In terms of average work week, it remained a little higher than it has been. 34.4. It was reverting. We had 34.3 last week. We had a lot of 34.4s. The high watermark that we've had really recently was 34.7, and that was basically about beginning of last year. We see interest rates have ratcheted up, and as I said, I do apologize. I can't pick off the earnings month over month or year over year. We do see that pre-opening equities have moved lower, so I would think that the drop in the unemployment, here we go, they're coming across now, up 0.4, 1/10 hotter than expected on month over month, and up 4% exactly as expected on year over year. And last month's 4.1 comes down to 4%. 4% really is the low water mark there on earnings going back to June of 2021 when it was 3.9. So earnings going down could be potentially less inflationary as we feed on higher wages when we look to higher inflation. But the drop in the unemployment rate is probably what merits discussion. And very quickly, 62.8 on participation rate. 62.8 is back up a bit. We dropped it down to 62.7. 62.8 is the high water mark. You have to go back all the way to February of 2020 to find a higher participation rate. That truly is something to celebrate.
Okay, positive cues that we are getting from Wall Street. Let's listen to some important opinion coming in from market experts on the November jobs print data.
I think takes away any concerns that the household survey is weakening. It had been running weaker than the establishment survey, so the unemployment rate had been drifting up in recent months, and some of that was reversed. I think that's reassuring. Payroll growth is firm, but gradually decelerating towards the trend pace. And I think the increase in average hourly earnings helps on the income side, but doesn't really take away the gradually slowing trend in wage growth. I do think wages are gradually decelerating to something more sustainable in the sort of 3.5% range by late next year.
Average hourly earnings at 0.4% is inflationary. And I think this is what is going to set up a complicated backdrop for the markets in 2024. We're rolling into the year expecting 5 rate cuts by the markets and the first one in March. And the pieces in place of inflation at or below target likely aren't going to be there by the time March rolls around. So some of this trade of the non-mega caps catching up to the rest of the market and S&P trying to cross 4,600, I think that gets difficult. And 2024 is volatile, likely to the downside at the early part of the year.
Okay, that is some expert opinion coming in on the US markets. Let's now get to the final update on our global market wrap this morning. European markets ended Friday's trading session higher, briefly hitting their highest level since February 2022. The German DAX surged 130 points, the British FTSE closed at a 7-week high with gains of 40 points, and the French CAC closed 1.5% higher. The Pan-European Stoxx 600 closed 0.7% higher for the day and 1.3% up for the week. Travel and leisure stocks led weekly gains, while energy and miners were the worst hit. Okay, all right. With that, we'll slip into a short break now. When we come back, we'll tell you how these overnight cues will impact our own markets in our Power Prep segment. So stay tuned for that.
CNBC TV 18, embarking on a quarter century of excellence. CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Power Breakfast. We now have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. It's a Monday morning, so a lot of cues. Ekta, tell us what are the market cues that are on your radar today?
Morning. Well, we are waking up to what was a strong US market overnight on Friday. We had the Dow, which was higher, S&P higher, Nasdaq, as well as, the markets hitting the best levels that we've seen in 2023. The US non-farm payrolls data indicated that the US economy continues to be very resilient, with the unemployment rate falling to 3.7% in the month of November versus 3.9% in the month of October. In terms of commodities, we had the crude prices, which did surge after what was a strong US jobs data. But gold, however, remained in a range, so above $2,000. It seems as though the commodities index or the commodities in general seem to be on up move overnight. Well, in terms of the markets last week, the Indian market saw the biggest weekly gain in more than a year. All of the frontline indices hit record highs on Friday. The Nifty hit 21,000 for the first time ever. The rupee remains in a range around record levels. FIIs continued to buy, so FIIs bought shares worth around 3,632 crores on Friday. DIIs sold shares worth around 434 crores. So the data with regards to the markets and the market setup continues to be strong. Maybe we could see some amount of consolidation today simply because Asia is a bit subdued post the Chinese data. So that could probably be a little bit of a deterrent. But overall, in terms of the other indices, we seem to be quite strong and resilient at this point in time. Macro data, India CPI, India IIP data, as well as the US inflation data is due from the macro front. We have a US Fed decision as well. And the India IPO landscape is gearing up for what is a busy week ahead. 6 IPOs collectively are going to aim to raise approximately 2,500 odd crores. So that's going to be something to watch out for. As of now, the GIFT Nifty is indicating maybe it could be a little bit of a consolidatory start, but nothing to write home about considering the strong gains that we've seen.
Oh, yes, we have. Thank you so much, Ekta, for all those cues. But a lot of stocks that will be in focus. Urmaz has that list. Good morning.
Morning, Sonal, and I'll start off with Tata Motors, where the prices of its commercial vehicles are set to go up by 3% starting the 1st of January of 2024. Bank of India closed its QIP on Friday, which was subscribed 4.1 times. It received bids worth over 18,500 crore rupees as compared to its plan to raise 4,500 crores through the QIP. And the issue price of the QIP has been fixed at 100 rupees a share. DCB Bank had a board meeting on Friday, and they have decided that its promoter Aga Khan Fund for Economic Development will infuse 830 crore rupees in the bank, and that will be done after the bank issues shares to them on a preferential basis, which will be done at 137 rupees a piece, which is a 14% premium to Friday's closing price. And post this fund infusion, the promoter stake will rise to 15.66% from 14% earlier. Multiple updates on GMR Airports, and I'll start off with the confirmation of a CNBC TV 18 news break where we had reported on Friday after the block deal that GQG is likely to be a buyer. It emerged as one of the largest buyers in that transaction. It brought nearly 29 crore shares, and Nomura and some others were also buyers in that block. GMR Airports, where their Goa International Airport charges have been increased starting the 1st of January of 2024 to the 31st of March 2028. And lastly, another unit of GMR Airports, which is the Visakhapatnam International Airport, has executed a financing agreement worth 3,215 crores to finance the first phase of development for the Bhogapuram International Airport. Newland Laboratories, where its founder has sold 4 lakh shares in the open market, that amounts to around 3.1% stake. Wipro has seen another top-level exit where its chief growth officer has quit. And lastly, Subros, where AC cabins are, which will be manufactured in trucks from the 1st of October 2025 are mandatory from that date. Back to you.
Okay, all right. That's a long list. Thank you so much, Urmaz, for joining us. So those are some of the stocks that will be in our focus. But a lot of cues from the FNO space as well. Nigel is joining us now. Hey, Nigel.
Well, morning, Sonal. You know, we had a very, very good past week, and it appears now the bulls, they want to end 2023 on a good note. So we'll be watching out for the central bank decision that you were talking about earlier with regard to the Fed. But how are the FIs positioned? Well, on Friday, yet again, we saw they added some long positions and they covered some shorts. And that's what takes the long position to around 58%. And if you look at it, in a matter of close to around 7 sessions or so, the net short positions of the FIs from more than 50,000 net short contracts, they've gone to a net long position of close to around 36,000 contracts. That's telling you the swing factor of around 92,000 contracts just in a matter of a week or so. How's the options data shaping up? Well, the 21,000 call, that has the highest open interest on the call side, while the 20,900 put, well, that has a fair bit of open interest as well. And you just plug in those numbers, well, you have some support at around the 20,700 and the 20,850. And I say that out here there is support because the 20,850 mark, almost all the 3 last sessions, we went and we visited that level. And from there, we saw a bit of a bounce. That becomes crucial on the upside. Since the 21,000 call has the highest open interest, the premium out there is roughly around 110 rupees. I'm looking at the 21,110. That'll be a bit of a resistance zone. But what has changed, particularly in the last week? Well, one thing is the Nifty Bank has come back to the party. So after a very, very long, we had the Nifty Bank that was actually outperforming the Nifty. We haven't seen that, so that's rather good news. And from the Nifty Bank, you had 30% or so, which was HDFC Bank. And that was a bit of a drag. I'll tell you what, this one is coming back in style, and this should be a portfolio stock for you. Maybe in the near term, things could still be a little bit, uncertain out there. But from a longer term perspective, this HDFC Bank was up close to around 6% in the past week. It had its best week since November 2022. And even post this small move, valuation-wise, well, it's still trading at a bit of a discount. So delivery-based buying is what we're seeing on HDFC Bank. And I'll tell you what, if Nifty has to move up towards the end of this year, and I think it'll be the stock to watch in 2024, HDFC Bank should be kept on your radar. The GIFT Nifty is suggesting a flattish opening. Back to you.
All right. Okay, guys. Thank you so much for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. So stay tuned for that.
CNBC TV 18, embarking on a quarter century of excellence. CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. Well, the Consumers Affairs Secretary Rohit Kumar Singh spoke exclusively to CNBC TV 18 to discuss the domestic availability of commodities like sugar, onions and pulses and highlighted the importance of having them available all year round. Listen into excerpts of that conversation.
The domestic availability of sugar is the supreme criteria. So if we are satisfied that at the end of the or at the beginning of the next crushing season, which also coincides with the festival season, if there is enough stocks available, that will give us comfort. So I think that's the primary criteria. The prices are not likely to increase. It will remain the same because of this action that has been taken as part of the decision. Domestic availability of onions in this season is very important. As you would appreciate, onions 70% are produced in Rabi. That crop becomes available from April. Then there is Kharif, and late Kharif is the crop is available now till late February. So we have to ensure that throughout the calendar the availability of onions is there, and that is why these policy decisions and tweaking takes place to ensure that across 12 months there is adequate availability.
Okay, all right. That's an exclusive conversation. But moving on now, Manisha Gupta is joining us with all the update from the commodity markets. Hey, Manisha, good morning. What do you have for us?
Morning, and I'm looking at the crude oil prices to begin with because this is a second straight day that we are looking at gains coming back. So 71 and 76 is back on charts here. Remember, the prices did fall 5% in the previous week, and this was a seventh straight fall in the markets there. This is the largest string or the longest string of decline since 2018 that we've seen in case of the crude oil prices. Well, what seems to be supporting prices is that the U.S. is looking to buy strategic reserves by nearly 3 million barrels per day for the March 2024 delivery. Also, China has pledged support for domestic demand, and that these are the couple of factors which seem to be supporting the prices right now. But remember, this is going to be a data-heavy week. You have the U.S. Fed meeting on Wednesday. You have the Bank of England and European Central Bank and Swiss National Bank meetings, all of that on Thursday. And then you also have the U.S. inflation numbers coming in for this week as well. So this promises to be an eventful and a choppy week going for the commodities. To begin with, barring the crude oil prices, most of the metals have started on a weaker note. So whether it's gold, silver, copper, aluminum, we've started Asia slightly on a weaker note for many of these.
Okay, all right. So that's something that we're seeing in the Asian equity markets as well. Thank you so much, Manisha, for joining us with all those details. It's time to get you some important national updates. Ending the suspense in Chhattisgarh, the Bharatiya Janata Party announced Vishnu Deosai, a party veteran former union minister, as the next chief minister of the state. He will be the state's fourth chief minister and the first tribal leader. The swearing-in ceremony is likely to be held in the next 1 to 2 days. Meanwhile, reports suggest that Arun Sao, the current Chhattisgarh BJP state president, and Vijay Sharma are likely to be appointed as deputy chief ministers, while three-time chief minister Raman Singh could serve as the speaker of the state assembly. Okay, with that, we'll take your leave on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next with all the action.
CNBC TV 18, embarking on a quarter century of excellence.